October 1929. The world stopped making sense. Bankers screamed into telephones, fortunes vanished in minutes, and once unstoppable titans of industry fell to their knees. But in the shadows, a few saw opportunity. This is the story of how the rich survived and the poor collapsed in the greatest financial disaster the modern world has ever known. The 1920s were a decade drunk on optimism, jazz, speakeasies, and endless ticker tapes. The American dream looked unstoppable. Credit was easy, stocks were soaring, and everyone seemed convinced they'd found a shortcut to wealth. People were buying everything from cars to shares on installment plans, leveraging their future for the pleasures of today. But beneath the glittering skyline of a booming America, deep cracks were spreading. Factories powered by new mass production techniques were churning out more goods than people could afford to buy. Out in the heartland, farmers were drowning in debt, their overproduction causing crop prices to plummet. The entire system was a glittering palace built not on solid ground, but on borrowed money and a foundation of blind faith. It was a party that couldn't last forever, and the hangover was about to be brutal. It all started with whispers, quiet rumors of margin calls, collapsing stocks, and a growing, gnawing fear. Then came Black Thursday, October 24th, 1929. The whispers became a roar. Panic hit Wall Street like a tidal wave. Crowds of anxious investors, from secretaries to moguls, gathered outside the New York Stock Exchange, their faces a mixture of disbelief and terror. Prices didn't just fall, they plunged into a seemingly bottomless abyss. Seasoned traders, men who had built fortunes on nerve and instinct, wept openly on the trading floor. Within days, a staggering $25 billion of wealth had evaporated into thin air. To put that in perspective, that was more than the entire cost of World War I for the United States. The Roaring Twenties had ended not with a bang, but with the deafening crash of shattered dreams. The stock market crash was just the first domino. The real catastrophe was the collapse of confidence that followed. Banks, which had loaned out depositors money for risky stock market speculation, began to fail by the hundreds, then by the thousands. Ordinary families who had trusted these institutions with their life savings showed up one morning to find the doors locked and their money gone. Overnight, lifetimes of hard work vanished. Lines for bread and soup stretched for blocks, filled with mothers trying to feed their children. Fathers, once proud providers, hunted relentlessly for any kind of work, no matter how grueling or low-paying. Meanwhile, the ultra-rich, those who had built vast empires during the Roaring Twenties, retreated into their fortresses of cash and gold. They had seen the writing on the wall and had pulled their money out of the market before the crash. Some even saw the panic itself as a once-in-a-lifetime opportunity. They called it buying the bottom, scooping up valuable assets for pennies on the dollar. But for the masses, the millions of ordinary people caught in the storm, there was no bottom. There was only the long, hard fall. Across America, Hoovervilles, makeshift shantytowns named scornfully after the president, rose like ugly scars on the landscape. Families constructed homes from scrap wood, cardboard, and rusted metal. In these desperate communities, children played with toys made from old soup cans and discarded tires. Men who had once been skilled craftsmen or office workers were reduced to selling apples for 5 cents on street corners, just to maintain a shred of dignity. The paradox was heartbreaking. Farmers watched their crops rot in the fields because they couldn't afford the cost to harvest them, while in the cities, people were starving. The land of plenty had become the land of despair. The American dream had turned into a waking nightmare for millions. While millions starved, the smart money was repositioning. The great financial dynasties, the Morgans, the Rockefellers, the DuPonts, saw the crisis not as an end, but as a transaction. Their family offices, armed with immense reserves of cash, quietly began accumulating assets at fire sale prices. They bought up stocks, bonds, real estate, and even entire companies from those desperate for liquidity. They owned the cash when everyone else was drowning in debt. They could afford to lend, to buy, and most importantly, to wait. And when the economy finally began its slow, painful recovery years later, their wealth hadn't just survived, it had multiplied. This wasn't luck. It was a cold, calculated strategy built on patience, foresight, and the immense power of holding cash when credit, the lifeblood of the modern economy, dies. Then, a new voice of hope emerged from the despair. In 1933, Franklin Delano Roosevelt stood before a broken and fearful nation and declared war, not on a foreign enemy, but on fear itself. His New Deal was a radical series of programs designed to rewire American capitalism from the ground up. The Glass-Steagall Act was passed, creating a firewall between risky investment banking and the commercial banks that held people's savings. The FDIC, the Federal Deposit Insurance Corporation, was created to promise that depositors' money would be safe, restoring faith in the banking system. And massive public works programs, like the Civilian Conservation Corps and the Works Progress Administration, put millions of unemployed Americans back to work, rebuilding the nation's roads, bridges, dams, and parks, and in the process, rebuilding hope. It wasn't a perfect solution, but it stopped the bleeding and began the long road to recovery. By the late 1930s, America was a profoundly changed nation. The wealthy were still wealthy, but their actions were now under a new level of public and government scrutiny. The poor and working classes, having been betrayed by the system, had learned a hard lesson in distrust that would be passed down through generations. And the middle class, forged in the crucible of this shared suffering, emerged as the new backbone of the American economy and identity. The scars of the Depression ran deep, but so did the lessons it taught. Markets can't rise forever. Confidence is the most valuable currency of all, and greed, when left unchecked, will always, eventually, send a bill to everyone. The Great Depression didn't just reshape economies, it reshaped souls. It was a brutal, decade-long lesson that reminded the world that true wealth isn't about what you earn during the boom. It's about what you manage to keep when everything burns down around you. History has a habit of repeating itself, but the wise are those who remember its lessons. Thank you for joining us on this journey through one of history's most defining moments. If you found this story compelling, don't forget to like this video and subscribe to Chronicles of Capital for more stories about how money was made and still is. We'll see you in the next one.